Welcome to Morphic Labs, and today we are going to be talking about range bar aggregation and point and figure aggregation. But before we get into that, do me a favor, hit the subscribe button if you want to keep up with more content like this. And if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course. The links in the description. And if you want one-on-one market intelligence sessions, hit me up on Discord and I'll walk you through the necessities. Let's get into it. Now, what is a range bar aggregation? Range bars close when the price range exceeds a threshold, regardless of time or volume. The formula: bar closes when mix of P sub I minus min of P sub I is greater than or equal than R sub target. Each bar has approximately equal height with varying width, time, and volume. When to use: volatility-based trading strategies, chart pattern recognition, support and resistance level analysis, reducing noise and ranging markets. Advantages: each bar represents equal price movement, filters out low volatility periods, clearer trend visualization, reduces number of bars in quiet markets. The disadvantages: range threshold selection is arbitrary, may miss important time-based signals, not compatible with standard indicators, can create very long bars during trends. Now let's get into the code. Today I'm going to be using my Dow Jones Industrial 1 minute tick data. This data is from 2025 12/22 at 9:30 around 2026. Wait, okay. So it's from 2025 12/22 around 9:30 up until 2026 1/5 up until 10:30. Now let's get into the range bar. The first range bar we're going to be using and checking out is essentially a range bar of a threshold of 10, or more formally, a R sub target of 10. Okay, it's done compiling. Now, as you can see, the threshold is 10, and when you look at the movement of the market, it's all over the place, right? We have 1,000 bars, and it's very chaotic, very noisy. But what happens when we increase the number of bars? We go from 10 bars to 100 bars, and all of a sudden, we have about 60 bars left, right? Remember what the advantages said. Clearer trend visualization, filters out low volatility periods, right? And when to use support resistance level analysis. So when you're looking at this range bar with a threshold of 100, you essentially took a 3,000 entry data set and you compressed it to 60 bars, right? That's very useful when you're trying to cut off the noise and just look for signal. Now, let's get into point and figure charts. This is going to be a sneak glimpse into my advanced market aggregation course. If you're interested in getting your hands on this course, it's free, but you're going to have to go through some qualifications to see if you're eligible. If you're interested, links in the Discord. Let me get into it. Now, what is a point and figure chart? Point and figure charts represent one of the oldest technical analysis methods, dating back to the late 19th century. This aggregation technique completely filters out time and volume, focusing exclusively on price movements of significance. Point and figure charts. Point and figure charts plot price using columns of X's, rising columns, and O's, falling prices, with each mark representing a minimum price movement called the box size. Construction rules: box size B, minimum price movement to record. Reversal amount R, number of boxes required to reverse column direction. Rising columns X's, continue while price is greater than or equal than current column high plus B. Falling column O's continue while price is less than or equal than current column low minus B. Reversal occurs when price moves R times B in opposite direction. Now, here's some common parameter settings. Table 4.1 shows that if the asset you're aggregating has a price level of under 5,000, you're better off using a box size of 0.05 and a reversal number of 3 boxes, and you're most likely better off using that aggregation on a penny stock. If the price level of the asset you're aggregating is about $5 to $20, you're better off using a box size of 0.10, a reversal number of 3, and small caps are where you should apply it. If the asset has a price level of $20 to $100, you need a box level of 0.50 and a reversal number of 3 and an application space in mid caps. Over $100, you're going to need a box size of $1, a reversal number of 3, and use it in large caps. If a price of any, you should just take 1% of the average 2 range, a reversal of 3, and it's adaptive, so you can use it in any type of market you want. Now, when to use long-term trend analysis and position trading, support and resistance level identification, pattern recognition like double tops, bottoms, triangles, etc. Price target projection using horizontal counts, filtering intraday noise for swing trading. What are the advantages? Completely filters time and volume noise, clear support and resistance levels, objective trend identification, price targets via vertical horizontal counts, no data gaps or irregular spacing. The disadvantages: no time information for timing entries, box size selection is subjective, limited availability in standard platforms, requires learning unique pattern vocabulary, not suitable for high frequency strategies. Now, let's get into the code. Now we're going to be picking a box size of 10 and a reversal number of 3. As you can see, it's very noisy, but there is structure there. So every X represents prices going up and every O represents prices going down. So as you can see, price goes up here, goes down and goes up again and goes down, goes up, goes down, goes down, and goes up again. Right now, let me change my box size. From a box size of 100, I'm gonna jump to a box size of 50, right? $50 worth. Now, look at that. There's more clearer structure. And when you go back to the advantages, completely filters time and volume noise, clear support and resistance level, objective trend identification. And as you can see, price was going up here and then it started going down here, started going up, started going down, started going up, started going down, started going up, started going down. Essentially, with this type of aggregation, point and figure, you don't need trend lines, right? You don't need to know that, oh, if price hits this trend line, it's going to do this. No, that doesn't matter, right? What point and figure aggregation does is it brings more sophistication to the typical support and resistance strategies, right? Because when you look at this, especially, let me show you something. Let me decrease this and take it to a number like 30, right? When you look at this, there probably is some interesting statistical property, because remember, this is data from 2025 up until 2026, right, in 1 minute. So you took all that data and you compressed it into these point and figure bars. Now, there probably is, this is just a hypothesis, don't go trying to make this strategy, it's not financial advice, but there probably is some interesting statistical properties between the distribution of the X's and O's, right? They will need an entire research allocation, but yeah, those are point and figure bars. Let's increase the reversal number. Now, as you can see, when you increase the reversal number, you get less bars, right? Let me increase it again to 10. Probably won't get 2 bars at this point. We got 3, right? So the market goes down, up. The market goes up, 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 and up. And then it keeps going down, 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 and then it keeps going up, 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 up. So essentially, what this aggregation did is that it took almost a year's worth of 1 minute data and it compressed it into 3 bars. Think about that. You took all the noise of every single trading day and you just compressed it into 3 point and figure bars. This is very, very cool because instead of using trend lines, you could use math to actually understand what the support and resistance is mathematically, not because a trend line told you so, because the math told you so. But that's about it for today. If you're interested in getting your hands on this advanced market aggregation course, hit me up on Discord. The link's in the description. I'll walk you through the qualifications. The course is free, but whoever gets it has to fit a certain description. And if you don't fit the description, here's my free market microstructure and trading systems course. The link's in the description. And I hope this has helped you. And I'm out. Bye.